All right, so thanks everyone for tuning in. And today's topic is called CPA tax advice, PPP, EIDL, and everything in between. So we're just gonna be talking about everything related to tax. And the good news is we have some experts here. We have a couple CPAs from Hallows and Company. And so let me just introduce all three of our panelists here today. We've got Lad Hallows, Adam Roundy, and Kade Hallows. So appreciate you all joining us and giving us your expertise. Going to do a couple quick announcements before we jump into our presentation and our question and answer session. First thing, make sure to check out odiesonfinance.com. We've got a lot of new content on there, including an article that Julie just posted yesterday that has all the PPP updates. I know there's been a lot of questions on the group and a lot of questions going to our email about that. So definitely check out that resource. We also posted it on the Facebook group. Remember to subscribe to the newsletter. If you jump on the website, there's a little pop-up that'll ask you to subscribe. Also, you can go down to the bottom of the website and subscribe if you haven't done that already. Remember to follow the Instagram account. It's at @odiesonfinance. We use the story feature on the Instagram account to post live news, and especially in this climate with PPP and all of that, we try to post things as up to date as we can. So definitely, if you're on Instagram, follow that. And finally, subscribe to the YouTube and the podcast. It's under Odies on Finance. This video will be on the YouTube channel in a couple of days, and we'll also be putting the audio as a podcast. So definitely take a look at that. And one more thing, all our student loan refi partners have updated their rates, a lot lower rates, especially Splash Financial. They've got a pretty good rate going. And Dat and I, especially Dat, he's worked with a lot of individuals in order to get them in that range for those rates. So definitely take a look at that. Once again, that's on our website, odiesonfinance.com. And without further ado, let's introduce our guests today. So we've got Hallows and Company CPAs. They're our new CPA partner. You might have remembered David Glenn from about a year ago. He did a similar program like this. He actually is no longer taking on new clients, but he's got a big family that he's working with. But he did recommend Hallows and Company. And so we're happy to have them on board. They're great guys. We've got Kade Hallows, Lad Hallows, and Adam Roundy today. And I know there's quite a few other members of your firm as well. And we're going to give them a few minutes to talk about their firm at the end of this. But to start out, if you guys want to just give kind of an overview of what's happening in terms of tax, in terms of your realm of expertise relating to the CARES Act and just the current tax climate that's going on. So.
Yeah, thanks, Aaron. So current tax climate is it like everybody I'm sure has heard is it depends. It depends on your situation. It depends on what tomorrow brings, what Congress decides to do and how they want to do it. But as of last Friday, President Trump signed into law the adjustments to the PPP, which having monitored the Facebook group a little bit and some of the comments there, there's been a lot of that addressed as far as moving from 8 weeks to 24 weeks. The FTE requirement being, I wouldn't say eliminated at this point, but getting to the point where, or being described as much less important due to the fact that pre-February 15th requirements are no longer necessary. As well as a 60% payroll requirement instead of 75% for those PPP funds. EIDL at this point in time is actually only available for agricultural tax people and not so much normal businesses at this point in time. However, lots of people who applied for the EIDL early on got shoved out, so to speak, and are just barely starting to be able to sign on to their loans now. But that's 3.75% over 30 years. Lots of nuances to that, but for the most part, we've seen most people being able to get those. So again, it's like I said in the beginning with tax climate, it really does depend on an individual situation and their specific points that they have going on and affecting them, and those can be addressed kind of on an individual basis, but that's kind of high level. What we see right now is the only thing constant is change, right? So that's kind of where we are right now, Aaron, I think.
Great. And Kade, anything to add to that? Or? Kade or Lad?
Nope. Like I said at the beginning, so much of this is changing, and so much of it was all thrown together that we don't have all the answers to all the questions. Neither does those that are creating the questions that everybody's having. So a lot of this is kind of filling it as it comes. Even in the whole PPP process, banks were doing things differently. Even banks don't have the answers. So there's still quite a bit of unknown.
My only 2 cents on that would just be due to the constant change come the year end. I don't think you want to wait until February or March to check up and make sure that you're in compliance with everything. I would say make sure that everyone gets in and does some tax planning before the year end to make sure that you're going to be in the best position possible come next year.
Yeah, definitely. Yeah, proactivity is definitely key. All right. Well, I want to invite anyone in the audience. If you got questions, feel free to just post them. They'll go straight to me and I'll ask them to our panel. Since we don't have any questions yet, we'll jump into the ones that we've already gotten through email and through Facebook. So let's jump to our first question. Can anyone confirm the PPP time period to spend funds has been extended? Did the House Senate officially declare 25-ish weeks instead of 8? And what is the deadline?
So yes, it was extended to 24 weeks, and that 24-week time period ends or begins, I should say, with the day that you receive those funds. And so whatever day you receive those funds, you count yourself forward 24 weeks, and that's when the time period it ends to be able to count the expenses or the qualified expenses towards forgiveness.
All right, great. And then looks like we actually got an audience question right here. A question about the EIDL. I am a single owner who takes a salary and distribution. I have heard that if you take an EIDL, in parentheses, 150K loan, you are not able to take distributions. Is this true? Would you not take an EIDL loan if this is the case?
So it's an interesting question, and this is one that in one varying degree or another we've heard a lot. It's, can I spend my money on this? Can I spend my PPP money? Can I spend my EIDL money on specific things? And the answer is, I don't know how anyone, truthfully, the government or otherwise, would be able to determine which dollar was spent where, right? Mm-hmm. So if you have the ability, and the ability to prove, I should say, how that money was spent, or the ability to prove that you had the cash to give yourself a distribution outside of the EIDL, then the answer is yes, you can still take a distribution. But if you don't have the ability to give yourself a distribution and all you've got is the cash that's from the EIDL, then the answer would be no. But it comes to cash flow. And if you're able to cash flow outside of the EIDL funds, then yeah, go right ahead. Same concept with PPP payroll stuff. One thing that we've mentioned to our clients specifically is go apply, get the money, because it's like throwing a rock into a pond. The rock creates ripples. Whether you're specifically affected right now, which obviously in your guys' position as ODs, you are and have been, but that rock creates that ripple, and eventually that ripple goes all the way to the edges. And so you will be affected to a certain degree. Whether that's large or small, we don't know. But the idea is to be able to get the money, be able to prove that you use those expenses specifically for the PPP in order to be forgiven, but then save your other cash otherwise for when that ripple does actually hit you. And hopefully it's not very big.
Great. Anything to add to that from Hallows?
Good.
All right.
Adam's the expert at this table on this. He knows what he's talking about.
So you're taking the reins. Sounds good. All right, we got 2 more audience questions. This one's from Raymond Brill. Also, shout out to Raymond Brill as an entrepreneur. That's a fantastic program that you got there. His question is it the safest to just use the PPP for salaries and not worry about splitting out 25% to avoid any controversy?
I would say, I mean, Adam, you jump in. I would say that it seems the cleanest because we don't know what the forgiveness, we don't know what the application for forgiveness process is going to look exactly like. They're obviously going to want naturally proof of those expenses. If you can allocate all of it to payroll, in my mind, that's going to be the easiest thing to show and the easiest thing to prove. And then there's no question about, what percent of it was here in payroll and what percent of it was outside of it. And because it's now extended to 24 weeks, we see that a lot of businesses are really going to be able to use up 100% of those PPP proceeds in payroll. And I think it's going to make that application for forgiveness a little bit easier and cleaner if you can.
I would second that for sure. I mean, if you think about what potential type of documents would be requested in order to prove the use of those funds, you can go to your payroll provider, or if you run your own payroll summaries during that time period to be able to show the use of those funds in your bank statements. Whereas otherwise, what I've in my reading have picked up is they're going to ask for copies of cleared checks. They're going to ask for bank statements. They're going to ask for invoices for all of those non-payroll related expenses. So it's going to be probably much more cumbersome to prove forgiveness for the other 40% if it's not in payroll.
Okay, yeah, that makes sense. All right, yeah, a few more audience questions coming here. This is from Ben Conyenbelt. Sorry if I slaughtered your name there. How does PPP-FA change things for 1099 ICs? Can they now have the full loan forgiven as a salary distribution rather than 8/52 of last year's net?
Let's see if I followed that correctly. And Aaron, maybe help me out summarizing wise, but the question is, how am I basically affected as an independent contractor, right?
Yeah, that's essentially what it is with the new PPP rules that came out.
So yeah, as an independent contractor, the loan, from our understanding, was granted based on your net Schedule C income, right? Even after depreciation, which we were a little surprised by, because usually bankers back out depreciation when they decide loans and different things like that. But so it's based on your net Schedule C income, limited to $100,000, which is the limit for any one employee. So essentially, the loan amount should have been, based on the way the numbers are come out to be, is anywhere between $15,000 and $20,000 of a loan, and that amount would be taken over 24 weeks instead of the 8, or 24 divided by 52, which would potentially give you an amount per week that from other bankers that we've discussed with, the proving of that for forgiveness would be a consistent draw for a Schedule C or independent contractor type individual.
Okay. All right, Ben, if that answers your question, then good. If not, you can leave a comment and then we can clarify, but I think that's what he was asking. And next question's from Stacy Harrison. She says, last year I was a sole proprietor, but switched to an S Corp in December of 2019. I started paying myself in February as a W-2 owner employee. What do I use to determine what amount I can pay myself to be forgiven for PPP?
That's a good question. I think you're going to have to go off of, well, not I think, the way the application existed is based on 2019, 2.5 times monthly payroll for what the 2019 average was. And so it would be based on Schedule C. However, you would use now your W-2 wages to be able to prove forgiveness. So it's a combination there between the two, I think.
All right, and then this one's from Lyndon. When I got the PPP using my Schedule C, I would like to use the entire PPP on my employees and stay on unemployment. Can I do that and still receive forgiveness?
Yes, in fact, earlier on, and I haven't seen otherwise, that was a strategy suggested by the experts, quote unquote, right? Mm-hmm. To even not so from a PPP standpoint, but from a cash flow standpoint, it was, hey, if you're even an S corporation, go on unemployment and get the funds there so that you can maintain your funds in your business to continue to pay your employees. So the answer is still yes. Use it because at the end of the day, back to one of the original questions that we had, I don't know how you're going to be able to track or how they're going to be able to track which dollar bill went to where. And I don't think that's the important part of it or the intent of it. The intent is to be able to provide or prove that a certain dollar amount, not specific dollars, but a certain dollar amount was spent on certain things. So yeah, go ahead and use it on your employees. You'll still be able to get forgiveness. It's how much did you use for payroll that's the key part.
Okay, great. And then are you guys familiar with the CMS Medicare grants that have been going out?
I'm not. I've read a little bit about it just from what I saw on your Facebook page, actually, but I'm not totally. So.
Okay. All right, Raymond. So yeah, we'll look that question up. You had a question about the CMS grants, so, and we will get back to you on that one. And then from Palak Butala, if I receive both SBA advance and state unemployment benefits, should you return the SBA advance?
As far as I understand, the SBA advance cannot be returned. And that's a grant anyway. Supposedly, it does not need to be repaid. But that's one of those questions that, or topics that we don't know all the answers to yet. I'm a little hesitant to come right out and say, even though readings say that it's not a loan, it is a grant. I wouldn't be surprised if it became part of the loan. So I'm advising clients to treat it as such for now, until more definitive language comes out.
Okay. And then from that same person, they're stating that I work as both a W-2 and independent contractor prior to the pandemic. I don't know if that changes anything for that answer.
I don't think so.
No.
I don't think so.
Okay. And then from Jason Ortman, are the SBA grants taxable income?
Are we talking PPP or are we talking EIDL?
That is a good question. Jason, if you want to comment and clarify on that question. He's not commenting yet. I'll wait for him for a little bit, but let's jump to one of the next questions that we had. Actually, well, I was going to do that, but then we got another question. This is from Scott Holbert. The EIDL is a grant, but you have to subtract it from the total loan amount of your PPP. That's the question.
The EIDL grants are part of, they were, if you got a PPP as well, the EIDL grant was considered or is considered an advance on the PPP. Is that
okay?
I mean, I think I understood his question, but that's how it's supposed to be determined. Now, at this point in time, with the way I have seen things, a lot of people applied for the EIDL and are only getting it now, whereas they applied for the PPP after they applied for the EIDL and got the PPP money before. I don't know how that's all going to work together yet. There's a lot of unknown there still.
Okay. And from Brandon Hawk. Hey, Brandon. He was one of my classmates. Are PPP funds tax-free? So
that, I'm going to get a little nitty gritty. Try not to get too lost in the weeds by myself here, but the Congress has come out and said, or Mnuchin has come out and said basically that it is not taxable. But what they also then said is that the expenses that were used or paid for using PPP money is not deductible, which in essence, if you look at that together and say, okay, this isn't taxable, but I don't get to deduct this, that's a wash, which if that's a wash and you have no expenses during this 8 to 24 week time period, essentially you're going to end up with additional income because there's no expenses to offset it. Unless there was no income whatsoever, then yeah, it isn't taxable and it's not income either. So it depends on how the business did, I think, during the time that you had the PPP monies, because there is potential that it could end up being income just by the fact that the expenses as of right now are not deductible. I think that's going to change. The intent from Congress was that I keep saying clients or thinking clients, taxpayers would have the ability to deduct the expenses that they were paying for, but not have to pick up income. I think that intent will eventually get met with law, but as of right now, it doesn't say that.
Okay. All right. And then, yeah, Jason clarified his question. He was talking about the SBA EIDL grant, if that was taxable income.
So again, as of right now, everything reads that it is not taxable income. I'm pessimistic when it comes to the government that way, though. So I wouldn't be surprised if it is, but if it is, I wouldn't be surprised if it is not taxable. I should say that the other way. Wouldn't be surprised if it is taxable, but if it is not, then great.
Okay. All right, we got a few more questions funneling in here. This one's from Nora Kroll. Is the PPP forgiveness term 8 weeks or 24 weeks, or can it be something in between? I would like to apply for forgiveness sooner rather than later.
It's anything in between. If you've used those funds for amounts that can be forgiven, then yeah, I'm with her. Let's go ahead and get it applied for forgiveness and get it out of our hair and be done. However, I will say this, the advice, I sat in a meeting with, it was a large virtual meeting, similar to this one, obviously, last week with a senator and a large bank president and the Utah Association of CPA president. And their advice, it was right before they passed the changes to the PPP money or law. Their advice was to wait. To apply for forgiveness, to just sit back for a little bit. And I would advise that as well, because things are changing so much. I understand wanting to get it out of your hair and be done with it. It still might pay to have things settle down a little bit and wait, 2 or 3 weeks to see where things come out before we actually do apply for forgiveness. You have till December 31st to apply anyway. So
okay.
In that same meeting, the comment was made that those that applied immediately for the PPP, they had a hard time compared to those that applied a little bit later, because banks had figured a few things out and their system was better and they knew the process and there was more information. I think it's going to be the same in applying for forgiveness. I guarantee you that there's a lot of banks out there that still don't know what that process is, and they probably don't know it very well themselves. So if you wait a little bit and let them iron out the kinks, it might be a little bit easier on you.
Okay, great. And then, yeah, here's a question from Lyndon. Would it look fishy to lenders if one of my employee wages goes from average to significantly higher and back to average again? I was trying to calculate and use the entire PPP within 8 weeks and now want to spread it out for the 25-week extension.
I don't know that we specifically know the answer to that, simply because we don't know what lenders are going to look at. Are they going to look at total payroll, or are they going to look at individual payroll? Obviously, they're going to have to a certain extent, look at individual payroll based on the $100,000 limit. But how in depth are they going to be? I don't know. I don't know that.
Yeah, we don't know the answer to that. It would be, in my mind, though, my thinking is it would be extremely difficult to look at all of that at that level of detail, because somebody could argue that, okay, yes, this employee wasn't paid much, but because of business, maybe I had to let people go, or I had to change the way I operated, and this employee had to start doing more. So they got paid more. So I would be surprised if they got into that level of detail.
Okay.
Again, the intent, if you keep 30,000 foot level here, the intent was not to put people in a position to where they're in a worse off position than they were because of the pandemic. The intent was to get money into the economy. And so that's why the change to the PPP rules, that's why I think there'll be additional changes. I think the overall intent was to help people get the cash, to pay people, to get money into the economy, and to not give them income or to not saddle them with a loan that they didn't have in the first place, nor did they most likely want.
Yeah, that makes sense. All right. And then Jimmy Grace asked, sorry if this has been asked, just joined in. Would it be advisable to take an EIDL loan and let it sit untouched and have it just in case?
I think you got to look at your cash flow, number one, how you've done so far. And number two, look into your crystal ball a little bit, right? Which obviously is difficult to do. But again, if we go back to that ripple effect, we don't know if there'll be another wave. Heaven forbid there is, truthfully. We hope not. But if there's another wave, or if there's another wave, do we know if Congress is going to give another chunk of change out? It's hard to determine that. I mean, with the way Democrats and Republicans are right now, you're definitely getting into some political questions there. And the answer is, in my opinion, especially if you're sitting on the cash, maybe it is worth paying a little bit of interest for a little bit of time, a couple of months, to determine where we're at as a nation and as we're at in a world economy, because we're all tied together. And if you need it, you've got it. If not, you pay it back, and you spend, well, technically you haven't even paid interest, because interest doesn't accrue and you don't have to make payments until 10 months from the time you get the money. So.
Right. Okay. And then Scott Holbert, just a comment. Yep, you guys know more than my bank. Thank you. All right. Yeah, I think that's the last audience question. So yeah, let's jump back into these questions. I think that was the next one we had from the email. Would the interest payment on my startup loan be a qualifying non-payroll expense for the PPP loan forgiveness? How about interest on financed equipment?
So it has to be on a mortgage or personal property. So the startup loan would not be, unless you're able to specifically tie that to a building or to personal property or equipment, that would not qualify. But yes, the equipment would. The interest on the equipment would.
Okay. And our next one that was emailed, I'm hearing that new legislation is enabling 60% payroll and 40% non-payroll for PPP. Is this correct?
Yes, it is.
Okay. And a follow-up, I think this was actually in the same email. Is there a deadline or expiration to accept the EIDL loan capped at 3.75% and 150,000?
So I actually, this was addressed in a couple of Facebook posts actually in the group. And I had to defer to that, honestly. I went and searched to be able to have some more definitive and authoritative guidance on this, but couldn't find any. But from my readings from people who have experienced this, you've got 30 days from the first email that comes to create your account, basically, and to view your loan amount. And then you get another email after that, and you've got another 30 days. So a total of 60 basically days that you have to accept this EIDL. If not, what's the word? No, non-action is the same as declining.
Okay. Yeah. All right. And then Brandon Hawk has another question. If an employee voluntarily quit after reopening from closure due to the pandemic, do we have to rehire an employee to avoid possibly not getting forgiveness?
No, one of the changes that occurred with the signing last Friday was that specific scenario, the inability to bring your workforce back to the levels that it was pre-February 15th. So no, not specifically.
Okay. And then Christine Yang just posted a question. If you take an EIDL loan, can you put it in a high yield savings account to try to offset the interest?
Yeah, I think that's smart to do.
Yeah. Makes
Again,
sense.
Yeah. It's not a matter, I think of where, I don't know how to word this better, I guess. I don't know how they're going to track which dollar bill went where, right?
Yeah.
As long as an amount was, you had the ability to prove a certain amount goes to certain places, but specifically this, I haven't read anything that prohibits sitting on this loan in a high interest yielding account to be able to set the interest paid out later. No.
Okay. And yeah, that does it for live questions right now. So yeah, let's jump back into these emailed questions. All right, this one's a bit of a story. I applied for a PPP early on and it was approved and received in early May. At the time I applied, the payroll amounts could not include funds for an owner draw. I am a sole proprietor, Schedule C. So I received the funds after that was changed, where you could include an owner's draw in the amount you borrow. Can my owner draw from these funds count towards the forgivable amount?
So similar to what we've talked about before, that Schedule C net income is the calculating factor here. You cannot make more than $100,000 per employee, and $100,000 over 8 weeks at the time was roughly $15-ish, $16,000 that individual could receive as the loan. So I'll continue on, I guess, and say I have seen individuals who, especially again, like Kade mentioned, where banks were trying to figure things out in the beginning. I have seen Schedule C individuals receive more than their $100,000 allotment or the $15,000 to $20,000 amount. And the question is the whole thing going to be able to be forgiven? Based on the information that's come out now, the answer is probably no. But what do we do just in case? You show a consistent draw. I think that's the main thing, is you show a consistent draw so that at the end of 24 weeks at this point, you have the ability to say, hey, I took this draw. That was my pay for that 24 weeks.
Okay. And then quick audience question, just a clarification. I heard, and this is from Josie Kosnick, I heard if you take the EIDL loan, you can not take owner distributions. Is that correct?
Again, the answer is that is correct. You can't use the EIDL. I should say, let me rephrase it, I guess, to make it a little more correct. You cannot use the EIDL money for distributions. However, okay, if you have the ability to pay yourself a distribution above and beyond the EIDL money, then I don't see why why you couldn't do that.
All right. And then Bickley just asked, besides the 100K cap, are there any other rules for owner wages with PPP?
Not that I know of.
I don't think so.
Yeah, I can't think of any that besides that 100 that I haven't seen anything that limits it going to owners.
Okay, and then one more, Palak Butala. I was advised by SBA that EIDL grant is considered unearned income. Does that mean it doesn't need to be reported on your tax return?
We don't know the answer to that question yet. And I would say that whoever advised you that they don't know the right terminology to be using from a tax standpoint, because unearned revenue is a total different ballgame than what we're talking about. Non-taxable is a different story. The grant, as of right now, is non-taxable based on the readings that we have. But unearned revenue, the question is yet to be determined. If it's not taxable, how are we supposed to treat it? Is it a book tax difference? Most likely at this point, meaning on your books, the only way to show that is other income. But when we go to do your tax return, and I would separately show that as other income so that you know what it is and it's not lumped in with your normal sales. So that when your tax return gets to be done as of this point in time, the CPA or the individual you have helping you prepare your tax return knows to do what I said, a book tax difference, where on your books it's shown as income, but on your tax return it is not.
Okay. And then Alex Ng just asked, I am an S Corp owner and paying myself for 1 month using PPP. Could I stop now and use funds towards health premiums and rent and just collect unemployment for 1 month?
Yeah, I guess you could do that, because health premiums and rent are also qualified expenses. Yes.
Okay. And let's see. Oh, just got a slew of questions here. Raymond, I received $9,000 in EIDL funds for the practice and $2,000 in EIDL for my separate building entity. Will I have to prove what I spent these funds on? Assume he's meaning the grants.
Yeah. Sorry, go ahead. What was that?
I think he's meaning the EIDL grant. Raymond, you can correct me if you're wrong, but
if he had two separate businesses, if he's self-renting, then there is potential that he applied for both. We'll answer it that way first. As of right now, because it is a loan, I don't think you have, from what I've read, you don't specifically have to prove. Now, the SBA can do whatever they want, right? They can say, show us your money, basically. But I have also read that anything that's less than $25,000 has no collateral with these EIDL monies, and it's to a certain extent at your discretion, basically, following the rules. Obviously, if you get audited, you got to prove otherwise, but especially less than 25 grand, you kind of have the ability to do with what you want, as long as it's for operating expenses per the rules. So.
All right. And then Monica Narula, I think she's asking a general question here. Since the extension of the PPP to 24 weeks, do you know of anyone that's been able to get a change in the amount of their loan to reflect a longer payroll period?
Meaning get more money?
I think that's what that means, yeah.
I have not heard of anyone being able to get more money yet, no.
Okay. And then a clarification. Oh yeah, go ahead.
Sorry, I was just going to say, it's still, the loan proceeds are still based on the same upfront as far as 2.5 times. The reason why it was extended was because businesses were getting PPP funds that couldn't even open up, depending on what type of business they're in, or what state they're in, or what the regulations were. So they got the funds, but they couldn't even open up in 8 weeks. And 8 weeks really is a very short period of time in this climate to, try to get back operating. And Congress realized that, and they realized that 8 weeks is really unreasonable. So that's why they extended that time, was just so that those funds would be there. Businesses that were going to be opening up, they were going to need those funds down the road, but it's still based on the same thing up front to get 2.5 times.
Okay. And then one clarification question from Scott. For PPP forgiveness, are health premiums considered payroll or same category as rent?
I believe they're considered payroll, especially if you're talking S corporation, because when you talk about health insurance premiums, they're technically not an employee benefit. They are a wage. They go on your W-2 in box 1. So yeah, I would say that they are payroll.
Payroll. Okay. All right. I think that takes care of questions from the live event for now. So let's jump on to the next emailed question. Another long one here. I applied for unemployment as a self-employed person here in Maryland and was approved, but I also got a PPP that I think I can draw from. And I have certified with the state for the weeks leading up to the date I received the PPP. My understanding is that if I can legally withdraw money from PPP for myself, then I should not be drawing unemployment. Is that correct? And does that also include the $600 extra? I assume that's referring to the unemployment.
Yes, this is a little bit longer, so I had to make a few notes on this one. If you are paying yourself a wage using the PPP money, then yeah, you're technically not unemployed, and therefore wouldn't and shouldn't be entitled to the unemployment. So to go back to something that we mentioned a little bit earlier, the idea behind this is, if you can, is to use the PPP money for other employees as an owner, and then you yourself stay on the unemployment to take the $600 and whatever Maryland is providing to you. But if you're paying yourself a wage, then you are not unemployed, and you should not be taking that $600. That's my understanding as to what's been asked.
Okay. And quick audience question from Alex Ng. Can I use PPP for retirement profit sharing as an S Corp?
Retirement is listed as a qualified expense. Profit share is part of the retirement. So I would say yes. Mm-hmm.
Okay. And then Scott McDougall also had a question. If you accept an EIDL loan for $25,000 and receive an EIDL grant for $10,000, would the loan received actually be $15,000?
I don't think so. I think that from my understanding, to the way people have received it is they've received $1,000 an employee for the grant up to 10,000, as well as, or in addition to the maximum loan amount of 25 grand, if that's what was available to them. So it's a total of 35,000 received, 10 of which is a grant, non-taxable, 25 of which is a loan to be repaid at 3.75% over 30 years.
Okay. All right, let's jump on to the next email question. I work for a corporation and put 5% into my 401k. And this is, we're jumping away from PPP and
Yes,
CARES
we are.
Act a little bit, which I think we need a break from that anyways. So I work for a corporation, put 5% into my 401k. What is the income limit on opening an IRA? Is there a total amount limit I can contribute in 401k and IRA? Is there income limits on traditional IRA and Roth?
So the answer, and Kade, maybe you have some input on this one as well, but from my expertise, you can contribute to both the 401k and a traditional IRA. That you do have the ability to do that, depending on whether you're married filing joint, married filing separate, which is the same as single, or head of household, is going to determine what those limits are, to where you cannot contribute to a deductible traditional IRA, as well as whether or not you have a spouse that is contributing to their, or has the ability to contribute to their 401k. Those limits they're all over the map depending on the different scenarios and situations that exist. But just for kicks and giggles, as far as this conversation, let's assume that we're married filing joint. You can up to 206,000 of total income. There is no limit. As soon as you hit 206 excuse me, I said that wrong. 206 is where you're completely phased out. 196 is what you can contribute to a deductible IRA, and it starts the ability to contribute the full amount of 6,000 is phased out by the time you get to 206,000 married filing joint. Let's see. I had to make some notes on this because there's so many different scenarios here. Married single is 139,000. That's when you're completely phased out of contributing to it. The starting phase out is 124,000. Total IRA contributions that you can have is 6,000 if you're younger than 50. You can contribute an additional 1,000 if you're over 50 for a total of 7. Let's see, might have got a little ahead of myself. Total amount I can contribute to your 401k is 19,500, no matter what, whether that's a Roth or a traditional or a regular 401k, it's still 19,500. No matter what, we recommend contributing to at least the amount that your employer, assuming your employer matches, but at least the amount that the employer will match, because that's free money. For sure. If you have the ability to contribute to a 401k, you may not be able to contribute to a deductible IRA, but that's where backdoor Roths come into play. And that may be a conversation for another time, but depending on your income, these limits that we've discussed, you do have the ability to still contribute $6,000 into a non-deductible IRA. And then the concept, keeping everything in a vacuum to this conversation right now, the concept is to immediately roll that over into a Roth so that you're getting money into the Roth. So.
All right, great. And jumping back to PPP, just got another question on it from Arlene Schwartz. Can I use the PPP for my deferred April rent, even though I received the PPP in early May?
I think that's going to come down to, again, documentation. If you can provide a document that shows, here's my invoice basically for my rent amount, and something from the lessor that says I'm deferring your rent payment, that says that, so that you can pay it later, and then you show that payment later on, then yeah, I think it can count. But I think that's going to come down to lining your ducks up to make sure that they say the story that you're doing.
That one's an interesting one. I don't know that it will be an issue. Technically, I know early on it read that the expenses had to be incurred and paid within the period. So where if it were incurred outside and paid inside the period, again, I don't know to what extent they're going to go to line those up.
Okay. And then just got another question here. This is from Zach Holland. Actually, something we haven't discussed yet. Can someone address the tax-free $5,250 student loan payment program in the PPP? Specifically, I've heard there are different max amounts for owners versus employees. Also, can a lump sum be paid to employees, or must recurring payments over the next 6 months be made to get to the max allowance?
I have to say that I don't know the answer to that question. I haven't had it asked of me, and I haven't had to research that, so I don't know. That's something we can find out.
Okay. All right, Zach.
Yeah, I don't know the answer either. Would gladly give them the answer. So if there's a process or some way for us to give the answers, glad to do that.
Yeah. So I will tag Zach Holland's question, and yeah, we'll get you an answer to it.
Okay.
All right. Let's jump on to the next email question here. We always paid our year-end taxes out of our personal accounts, but sources suggest that the S Corp should pay the owner's taxes. With S Corp tax info flowing through to the personal taxes, it seems reasonable. What are your thoughts?
Yes, for sure. It's not. Basically, we're talking about cash flow and where the cash is. The payment of those owner's taxes is not deductible. It's basically treated like a draw or a distribution. But yeah, especially if that's the only business that's creating the tax, then for sure. If you have the cash flow to do it, then yeah, do it. We recommend everybody do that.
Okay. And next one, I'd like to get my realtor's license so I can qualify as a real estate professional. Once again, jumping to a little bit of a different topic. In order to have all real estate expenses deducted, is this a good idea?
So real estate professionals, they have to meet some pretty specific and hardcore requirements. Most often, I'm going to say most often because of those requirements. If you have another daytime job, you most likely will not qualify as a real estate professional just because of the way the tax law is written and the requirements there. So just by getting your realtor's license would not make you a real estate professional. There's so many nuances to this that this is probably a more in-depth conversation that's not answered in 30 seconds to a minute, for sure.
And then this one's kind of related to what's been going on. I've been working from home doing admin work per the lockdown. What can I write off as an office expense?
First question, well, you all may be seeing that the answer is a lot of times it depends, like we said in the beginning. But First question to this is: are you an employee or are you a self-employed person? Right?
I think this is coming from an owner.
So this is an owner. Then the answer is yes. You can deduct a certain percentage of your expenses that you incur at home. And again, some of those expenses are a little easier to come by than others. If you're an S corporation, again, it comes back to it depends. If you're an S corporation, you can essentially reimburse yourself as an employee because you are a W-2 employee as part of your business as well as an owner. So what we do is we do a calculation of a home office expense essentially before the end of the year, determine an amount, and you write a check before the end of the year. So you get that deduction in your business, and it is not income to you as an individual because it's a reimbursement. Or another way to do it is we determine, especially if it's not all the time deal, it's just related to COVID-19 type situation. We say, okay, how much time did you spend? Basically come up with a percentage out of 100 and multiply that by the expenses that are associated during that time that you were working at home. And we take those as a deduction in the business through some different ways of doing that. So.
Okay. And in the next one, I read that we can 1099 a doctor if that doctor has a corporation. Is this true and legal?
1099 rules are that you are required to issue a 1099 to anybody that you pay rent to, or that provides you a service, or is a royalty, and no matter what, an attorney, right? And potentially medical too. Here's the deal with 1099s. You can't go wrong with issuing a 1099. You don't have to if they're a corporation, whether they are a doctor or not, unless they're an attorney. The attorney doesn't matter. You have to give them a 1099. But you can't go wrong by issuing one. It's not going to hurt you. And so, yes, you can. It is legal to do that. It is not illegal. Is it necessary? It depends.
Mm-hmm. Okay. And this was a pretty open-ended question. I was thinking that we could probably even write a whole article about this, but what are some creative and legal business owner tax deductions that many people don't know about?
I really like this question, actually. There's a lot of things
to the Caymans.
Yeah. This could be a whole nother Facebook Live event, honestly, Aaron.
Yeah.
But off the top of my head, that as I look through things, my first instinct was, and I get a little bit nerdy sometimes. Obviously, I am that in and of itself because I'm an accountant, right? But the tax law says ordinary and necessary. And I deem that as, if you spent money to make money, then let's deduct it. That's the high level. But here's some additional things that a lot of people don't think of or know about or dive into, or maybe they're doing it and they don't know that they can deduct it, right? Cost segregation studies. That has to do with real estate. Whether you rent to yourself, you own your building and you rent to yourself, there's some ability to get some significantly increased depreciation earlier on rather than over 39 years. So cost segregation study is one. HSAs. If you are on a high deductible plan and you are an S corporation or a partnership, doesn't matter. You should be paying your HSAs or funding your HSAs through your business and taking the deduction for that in full. Backdoor Ross, we kind of hit on that a little bit earlier. Again, a conversation in and of itself, but backdoor Ross is something that should be done. Again, not specifically a tax deduction now, but it has the ability to really save money later on. 401ks, a true 401k with the profit share. In discussion with lots of business owners, sometimes they are a little hesitant about the true 401ks with the safe harbor, simply because it means that they have to contribute to an employee's 401k if they also contribute. But again, you have the ability to sock up to $56,000 a year away to yourself and have that be deducted into business if it's all set up correctly. That's a big deduction per year. HRAs, a health reimbursement arrangement. With how Obamacare has gone the past several years, these were kind of frowned upon for a little while, but now it's been opened up a little bit more for them. This is the ability to basically reimburse your employees for their health costs up to a certain amount, without having to go out and get a group plan, which as we all know, is significantly expensive to be able to do. But again, if I can go back to what I started out with, ordinary and necessary. If you spent money to make money, we should deduct it. And I mean, it doesn't hurt to ask, hey, can I deduct this? And let's talk about whether or not it's ordinary and necessary.
Yep, and we got a fantastic CPA firm that's on the group that anyone can ask. So, and then one question about going back to the CARES Act. We've got one live question for independent contractors that don't have multiple employees or much overhead, and they are basically paying themselves. Is that now lowered to 60% for forgiveness?
Yes.
What happens for people that are halfway through and was going by the 75% rule?
So yes, it is 60% now. And it may deem or necessitate kind of a recalculation of, hey, what else is out there that I have the ability to spend a qualified expense on or incur as a qualified expense to have be forgiven rather than just my payroll, so that maybe you can spread that money out a little bit more. So yeah.
Okay. And let's jump over to the next question. This question actually has been asked at least 10 times on the group and has been emailed to us as well. I am thinking about putting my children on payroll, glasses modeling, and office duty so I can start a retirement plan for them. Is this a good idea, and what age is considered too young?
I think it's a great idea. This is something we recommend. Now, depending on how you are set up as far as taxation wise, if you're a partnership, the answer differs a little bit compared to an S corporation. But the answer is, yeah, let's do it. It keeps money in the family, so to speak, rather than going to Uncle Sam, as well as you start your kids off at a very early age, putting money into retirement. And the additional step to it is not just a retirement plan, but a Roth. Because it's earned income for them, they have the ability to contribute to a Roth. And if they can get 60 plus years of tax-free growth on that money, boy, that pays major dividends at the end of the year, or when everything's all said and done. So what age is considered too young? What the IRS looks at in this particular case is what are the tasks that they're being asked to do. Obviously, you're not going to pay your 2-year-old $10,000 a year to take out garbage. You know what I mean? It's what are they being asked to do versus the amount that they're being paid to do, right? So what we definitely recommend is based on their age, determining a reasonable amount for them and documenting that as far as here's the hours that they keep and they turn in and get paid, etc. But you kind of have to use, good judgment there as far as how old are they and what they're being asked to do and what they're being paid for it. Partnership though, just real quick, if you are set up as a partnership and you pay your kids, you do not have to pay payroll tax. No Social Security, Medicare is required, let alone federal and state withholding. And so the idea is to pay the standard deduction amount, which is now 12 grand, if it's reasonable for what they're doing, pay the kids $12,000. They don't have to even file a tax return because their standard deduction wipes it out. But it is a $12,000 deduction to you, and you're not paying payroll tax on it. If you're an S corporation, that doesn't exist. And I should say partnership that's owned by mom and dad. If it's partnership owned by 2 friends, that doesn't work. You can't do that. They have to go on payroll. Partnership owned by mom and dad can do that and not pay payroll tax. S corporation, no matter what, whoever owns it, doesn't matter. The kids would have to go on payroll themselves and payroll tax would have to come out.
Okay, great answer. All right, and then these were the last couple questions that we actually got this morning that I sent over to you guys. First one, I was approved for my small business loan up to 150K. I have heard from someone who was approved for only 26K that there was no collateral required up to 25K, which is something that you did discuss. And it seemed like a great deal, but after that amount, there was lots of language on collateral needed, plus an agreement for UCC-1 filings. Will I be able to accept my loan for, say, 149K and have it be collateral free with no UCC-1 contingencies? Can I ask for a copy of the loan before deciding how much to take?
So as of right now, my understanding is no. Once you pass that 25,000, that's when this comes into play. From some of the loan documents that I have seen for individuals who have accepted these amounts of money, they basically say that we are taking collateral of anything that we can without verifying anything that you have. That's basically what they're doing. So, but no, there's not, that 25,000 is that's the limit. There's nothing after that.
Okay. And this was another question that found its way to us this morning. With the changes, it seems like full-time employment doesn't matter. I was planning on using all the PPP on payroll in 24 weeks. Today, I had to pay for May 24th to June 6th payroll, and I only used 32 hours per week and paid one doctor 24 hours and another doctor 8 hours, and I didn't pay myself. Was that wrong not to hit 74 hours or even 45 hours if I did 60% off the 75 hours for payroll? And was it wrong that I didn't pay myself?
Again, I think we have to look at this point in time, just because the whole FTE thing is has been kind of scatterbrained now. It's been turned upside down. As I understand it, as we understand it right now, the FTE thing has become less important. Again, the intent was not to saddle people with additional burdens. It was to, in fact, that meeting that I referred to a little while back, as far as with some senators and bank presidents, et cetera, they mentioned in that meeting that the intent of Congress was never to see this money come back. And so again, this is why the changes to the law, to have it be forgiven, to allow taxpayers to have a forgiven amount. So I don't think the FTE thing is as important as it was as of last week. The fact that you didn't pay yourself is not specifically important. The most important thing is that you spend that money 60% on payroll at this point in time or more.
Okay. All right. And then I think this is a continuation of this question. In order to be forgiven, do I just have to make sure that 60% is spent on payroll and get the hours back up to 98 hours per week by December 31st? Or when I submit the paperwork for forgiveness, does it matter how many hours I use every week? And am I supposed to pay myself the max every week because I'm the only full-time employee?
Not specifically. This is one of those situations where the SBA came out with the loan forgiveness application, but now it's null and void because of the changes that took place on Friday. So the loan forgiveness application last week was heavily relied upon FTE calculations. We don't know what the revamped and revised application is going to look like, truthfully, simply because, as it mentioned specifically in the changes, if you were not able to bring your workforce back to pre-February 15th numbers, you're okay because you couldn't hire someone or because they couldn't come back on, you couldn't find the qualifications, whatever it is, that they're making it less stringent and less FTE based, and more so I used the money where I was supposed to use it. But we need to wait for the new loan forgiveness application to better answer these questions.
All right, great. And then I think we have one more audience question. Independent contractor, what qualifies as a business expense? And then he put, does paying rent qualify as a business, paying apartment rent qualify as a business expense?
Again, is it ordinary and necessary? And do we, as an independent contractor, this is something we often do, is we establish a home office. Because if we can establish a home office, then we can establish that at least a portion of the rent, yes, is deductible, as well as anytime you leave your house to go somewhere for work, those expenses become deductible. So that's again, as an independent contractor, self-employed individual that works out of their home, there's some nuances to that helps us be able to take what are usually personal expenses and turn them into business expenses.
All right, great. Well, at this point, we're hitting about a little over an hour. So I want to open up the floor and just, I'm gonna stop sharing the screen so that everyone can see everyone. And so Hallows & Company is our new CPA partner. They're a fantastic group. As everyone on the ODs on Finance group knows, we vet these partnerships heavily. Dat and I scour the websites. We talk to all the individuals on the phone. We have email chains. And after we vetted you guys, you seem like a fantastic fit for our audience, for optometrists, especially small business owners. We have quite a few of those. So just want to give you the floor for a couple of minutes. If you guys just want to tell us a little bit about your firm and what you guys do.
Yeah,
I'll let Lad speak up on this one. My mouth is dry.
Yeah, if you've got the next 18 hours, we'd love to take a few minutes. Explain. No. Yeah, no, we're excited about the relationship too. We're not, I can tell you a few things we're not. We're not a large, huge, impersonal firm. The name Hallows & Company actually is because my dad and Kade's dad were brothers. Actually started the firm about 36, 37 years ago now. We've been operating ever since, and we're about We're about 20 people strong at this point, which we find we love it because we're big enough to have all the resources that any small business owner could ever need, from accounting standpoint, from a tax standpoint, from a financial planning standpoint, and even some other services outside of there. Overall, if I had to kind of say what people say, I say sets us apart, honestly, is they say, my experience with you never feels like what I have experienced in an accounting firm, or what I imagine an accounting firm feeling like or experiencing. Because one example, that's just me. I don't do accounting. I actually do no accounting work. My job is my number one question I ask each day is, what has the client experience been with us, and how do we make that better? We don't have a big panel of 10 different partners that sits up in their stuffy offices and, hands down, work down the ladder, and clients continue to get pushed down and pushed down and pushed down. We have multiple CPAs that come from some of the biggest firms, actually regional firms. So they have a ton of experience, they have the knowledge and resources, but they didn't like what these small business owners the experience they were having and the way that they were treated. Because honestly, a lot of them, if you weren't a $50 million plus company, you didn't get much attention. Or you may have originally, and then you got passed down and passed down and passed down. So overall, I'd say our huge focus is the experience with our clients. So when this whole pandemic thing hit and everyone was like, we've got to start using Zoom, and the other half people were like, what's Zoom? We had actually been using Zoom with our clients for almost a couple of years already. So it's nothing new for us to be doing it. So we're excited at the opportunity to interact with medical professionals. It's a field that we work a lot in, with a lot of different individuals in those areas. So it's a field we're really, really familiar with, the nuances that you guys experience in that industry. And so we don't consider ourselves to, I guess, know everything about everything. That's kind of impossible, especially Adam demonstrated an amazing knowledge of what he did already, especially because everything changes so fast. But overall, our clients, they're what we've built everything around. The focus is their experience with us. We try to be a place where clients feel comfortable going to for questions. The other, I would say, biggest difference sets us apart from typical accountants is we work with our businesses on a very, very regular basis. And how it works is we will custom build, and you can see this on our website if anyone wants to kind of see our packages and how we package our services and how we deliver them. You can jump on our website and see it. But we'll build specific packages for the business. We can become as involved as they need us to. Basically, we can take a business and eliminate, if they want us to, or we can work right along with bookkeeping staff. We could basically eliminate the need for them to have any kind of internal bookkeeping and accounting staff if they want to, and we can scale right with them. They work with a team. They get assigned, for example, like Adam would be like a lead CPA on an account. They might get assigned a lead bookkeeper and potential payroll specialist and data entry specialist. So anywhere from 2 to 4 people that they work with on a really regular basis that they become friends with, actually, and get to know really well. So, and we work with businesses all over. We have clients our physical offices in Utah. We have clients in California, Colorado, Texas. We have clients everywhere. It's the nature of our industry now. So, Kade, did you have anything to add to that?
No, not much. Other than what you said, overall, I just always thought it a bit ironic that accountants give out business advice to business owners on how to run their business, but accountants themselves, more often than not, run a very poor business. A lot of times accountants forget that they're in the people business, or don't realize that. We are in the people business. We're great at what we do from a knowledge standpoint. We have, tremendous resources, but we are in the people business. And to us, We run our practice like a business, and to us, it's about quality service. It's about and really a top tier client experience, like Lad said. So it's I wish we could just say we're cheaper, we do this better, we do this better, we file your 1040 better, we file your 1065 better, we're just better at filling out line 45A on your tax return. But it's not quite as easy to explain how the experience is different. And that's what's important to us, is just that experience for the client, something different than what they're used to.
All right, great. Adam, anything to add? I know you've been talking a lot already.
You drink of water, maybe?
I'm good. I'm good. No, I ditto what they said, and I've known, we've worked together for a long time. Kade and Lad and I and myself, and their dad Ted. We've known each other for a long time. We have a good chemistry, and like they've said, the overall number one goal for us is to make sure that a client has a good experience, is happy. Obviously, a close second is making sure that they are benefited and that they're getting what they deserve from a knowledge standpoint, obviously. But to be able to present that is a very important thing that oftentimes gets overlooked.
Great. And then we had one audience question. Zach Holland is asking what the Hallows website URL is, and it is on our website. So if you look under recommended professionals, you can find it. There's also a banner ad on our website. But if you guys just want to verbally say what it is for the people listening.
It's hallowscompany.com. Pretty
Sure.
simple.
Spelling on your shirt? No, Steve.
Yep, it's just,
And your muscles, show them your muscles.
but it's hallowscompany.com.
Okay.
There we go. All right. Well, fantastic, guys. I really appreciate all of you coming on. I know it's at the end of a Tuesday, but yeah, really thank you for your advice. A lot of people are very appreciative of what you guys have done. So Lad, Adam, Kade, thank you again. And yeah, you'll be hearing from some of our members, and members, they are on the Facebook group. So if you ask a tax question, you'll actually get a CPA answering it a lot of times, which is also a fantastic thing. All right, you guys.
Appreciate it.
No problem. All right. So I guess we're going to sign off with this live event. Thank you for everyone that tuned in, and y'all take care. Okay.
Okay.